Hi guys, it's Stephen Edwards from Chartered Tax Accountant. So today we're looking at the most tax efficient number to pay yourself if you're a director of your own limited company in 2021-2022. So that's the tax year that ends on the 5th of April 2022. I do apologise in advance because I am doing this video in my kitchen. We're still in lockdown at the time of doing this video, so I thought be authentic, do it in the kitchen. I haven't got a fancy Zoom background or anything, but hopefully it's the information I'm giving you that's helpful. So a little bit about myself and my company. So I'm the director of a firm called Chartered Tax Accountants. I have 20 years almost experience in tax and accounting. So we're very familiar because we look after a couple of hundred small businesses. So we're very familiar with the most tax efficient way of taking money out of your business and paying yourself. So this is not something that's academic. I'm not a YouTuber who's pretending to be an accountant. I am a real accountant with a real business, and I've got a team of staff that helps look after our clients. So I'm going to keep it short and sweet. We're going to cover purely how much to pay yourself, but we're also going to look at, in other videos, corporation tax, working from home, and some other things that might be of interest, and VAT tends to be quite a popular subject as well. But keeping on subject. Right, okay, so we get to the magic number. If you're just looking for the number, I promise I'm going to give you it really soon. We're not going to mess around. So just a little bit of background. So every tax year, just to give you the reason and the logic behind where these numbers come from, a lot of people get confused with the income tax-free allowance. So each tax year you can generally earn around £12,500 completely tax-free per annum. So common sense would say, why can't I pay myself £12,500 or around that number each year because it's tax-free? Well, you're right, it is tax-free, but it's not NI-free. So National Insurance has its own bands, its own limits, and that's what I'm sharing on this page in particular. So you've got the lower earnings limit, you've got the primary threshold, and you've got the secondary threshold. So the most important number is typically the secondary threshold, because this is the threshold where you're going to start paying national insurance as a director. So typically what we want to do is we want to pay yourself up to the secondary threshold. So the secondary threshold is 8840 in 2022, because it's a bit of a strange situation. If you pay yourself above the lower earnings limit, so that's 6240, and up to the secondary threshold of 8840, you don't physically pay any national insurance whatsoever. Doesn't cost you a penny in national insurance. Also doesn't cost you any tax because it's below that £12,500 limit. But you qualify for full state pension entitlement and allowance, and that's pretty key. You qualify for all of the potential benefits you would qualify for if you were earning £40,000 as an employee. And for people new to limited companies, paying yourself is a strange situation because a lot of people want to physically pay national insurance. They feel they need to pay something to be contributing. But actually, if you pay yourself a penny more, a pound more than what the secondary limit is, you're costing yourself tax. Well, you're costing yourself NI. It's a cost for no reason and no benefit. If you paid yourself, let's say, a £20,000 salary, you're going to pay a shed load in employees' national insurance and also employers' national insurance for no real benefit. So that's a bit of background in terms of the bands. The magic number. So you can see the number down there. I've got 8820 or 8832, pretty much the same number. I'll explain the difference. So based on that secondary NI band and limit, we recommend that you pay a salary of either 735 or 736. So taking you right up to that secondary band. If we just skip back, you can see here the band is 736 per month or 8840 per annum. So you can either pay up to the 736 or just below it, just to be comfortable, a pound below. It doesn't really make any difference to the numbers, but we're going to use 735, a pound below, just for my example, but it won't make any difference if you use 736. So 735 times 12 is 8820, or if you want to go with the 736, it'd be 8832, and you can pay that completely tax-free and NI-free. So it doesn't cost you or the business a penny. You'll get full tax relief on this number, which is really important. So your salary as a director will go through as an expense in addition to any proper salaries you have for staff. So this will go through as an expense in your business, and you're going to save 19% corporation tax. So you're going to save over £1,600, and I'll just give you the exact number you're going to save in corporation tax. £1,675 ATP with the 8820 in corporation tax. So that's why you want to run a payroll. There can be some situations where you might not need to run a payroll because there's no NI due, there's no tax due, but you're going to lose out from your state pension entitlement. So you do want to submit a proper payroll through RTI, which stands for real-time information. You can do it yourself with things like QuickBooks or Xero, or you can get a payroll bureau or an accountant to do it for you. And that's it. That's the magic number. That's the number you want to be looking at. So just to kind of explain that in a bit more detail, if you're paying yourself a salary of £8,820, taking you up to the higher rate tax band before you get into high rate tax, that's going to give you £41,450 available to pay yourself as a dividend or any other income sources you have. If you were paying yourself £41,450 in dividends and £8,820 in salary, you're going to be looking at a tax bill of £2,678 in total. If you're, I don't want to go into too much detail, but if you're earning, let's say, £60,000 after you paid your corporation tax, after you paid all your expenses in your business, then some people want to intentionally stay below the higher rate tax band. And this is why this is important. The high rate tax band is 50 to 70 for this particular tax year. So if you pay yourself a salary of 8820, that's what you've got left. And of course, you've got some other allowances as part of this tax calculation. You've got your 12,570, which is completely tax-free for 21-22. You've also got your dividend allowance, which is completely tax-free. So effectively, you've got your 12,570 plus your 2,000. You've got 14,570, just over 14,500 you can earn completely tax-free before you pay a penny in tax. Anything up to the higher rate limit, the high rate band of 50 to 70, it's going to be 7.5% in dividend tax. Anything above that is 32.5% dividend tax, so something you want to avoid. In other videos, we're going to look at how you can, other ways you can reduce your high rate tax. So if you're earning, let's say, £70,000, what can you do to reduce your high rate tax? We're going to look at that. So that's it, guys. So just to go back to the number, you've got 8820 or 8832, anywhere in between those numbers, you can't lose out. That's the most tax efficient number you can run in 2022. Moving on, if you want to discuss this and to review your personal circumstances, you can book a meeting with this link on our website, free chat, no obligation. Literally just pick our brains if you want to. There's no requirement for us to actually be your accountant. But if you want to ask me about anything in this video or any other videos, I'm more than happy to answer your questions. Thanks, guys.